Assalamualaikum warahmatullahi wabarakatuh and good afternoon. In this set of videos, we will be talking about accounting for partnerships. Okay, so in our previous lectures, we have been assuming that the business that we have looked at are sole proprietorship or business that is owned by one person. And we have looked at three types of businesses that they run. The sole proprietorship could be giving out services for their revenue, and then the business could be doing merchandising business, which is to buy items and sell those items, and the businesses could be manufacturing business, where they buy raw materials, they convert those raw materials into finished goods, and they sell off those finished goods. So what we have been looking at was the type of business that they run, the operations. But now in terms of ownership, we have only been looking at sole proprietorship, where the business is owned by one person. But there are other types of ownership, and one of it is partnership, which we will be looking in this particular topic. Okay, what is meant by partnership? Partnership is an association of two or more persons to carry on as co-owners of a business for profit. Okay, so a business that have more than one owner, and they together work in hand to run a particular business, then that is called a partnership. Partnerships are usually used in the form of small retail, they give services, or manufacturing companies. Also, there are some manufacturing companies which are based on partnership. And types of services, professional services that are typically are in the form of partnership would be the accountants, or accounting firms or audit firms, as well as law practices, and also doctors or clinics or health centers. Okay, so some characteristics of partnerships. Firstly is the association of individuals. A partnership where two or more partners, they join together, they have an agreement to form a business, and they form a business in terms of a partnership. It is a legal entity, meaning that they can enter into agreements on behalf of that partnership separately from their own as themselves. Okay, and it is also an accounting entity where each partnership is separate from the partners themselves. Okay, net income is not taxed. In terms of tax, the partnership is not taxed on its own, but each partner will be taxed according to their portion of the profit they obtain from the partnership. Okay, so partnerships, they act as a legal entity separate from their own personal self. Partnerships also operate as an accounting entity separate from the partners themselves. But in terms of income, net income, the partnerships are not taxed, but the individuals will be taxed based on the amount that they receive from the partnership business. Okay, and then for mutual agency, what does this mean? It means that the act of any partner is binding on all other partners so long as the act appears to be appropriate to the partnership. Okay, so when one of the partners enter into an agreement with outside parties, the partnership is bound by that agreement, even though without the consent of the other partners. Okay, but as long as the act is in connection with the business. So for example, if let's say a partnership that runs a retail business, okay, so one of the partners bought a truck which is usually used for transporting the items of the retail business, then all the partners, or the partnership is bound by that, by the purchase of the truck. But if, for example, a law firm purchase a ski resort, okay, purchase a ski resort, so the partnership will not be bound, because it is not but the nature of the law business to run a ski resort. Okay, so in that sense, in the second case, the partnership is not bound by the purchase of the ski resort, but in the first case, the retail business is bound by the purchase of the truck. Partnerships have limited life. Whenever there are changes to the partner, if one partner withdraws or a new partner is admitted, then the partnership is dissolved and a new partnership is formed. However, it does not mean that the business ends. The business can continue even with the changes to the composition of the partnership. But the partnership itself is dissolved and then reformed based on the new admission or new withdrawal of any partners. And then partnerships have unlimited liability in general. Therefore, whenever the business dissolves and or is liquidated because of bankruptcy, for example, and the business needed to pay off its debts, then when all of the assets of the partnership has been liquidated to pay off the debt, and yet all of the debt is not being paid fully, then the partners, their own assets, their personal assets may be liquidated in order to pay for the debt of the partnership. Okay, that is what is meant by unlimited liability. Okay, and then all of the partners will have co-ownership of the property, meaning that they have a claim on the total assets. However, this claim does not attach to specific assets. Okay, so each partner do not have a specific claim to any particular asset, but they have a portion of claim on all the total assets as a whole, the value of the total assets. All net income and net loss is shared equally by the partners unless otherwise stated in the partnership agreement. Okay, so by default, the net income or net loss is shared equally among all of the partners unless they have stated in the partnership agreement that a certain partner will receive, for example, 20% of the profit, another partner will receive 30%. So unless it is stated in the partnership, then all of the partners should be getting the net income as an equal share.